What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. Today's date is February 17th, 2021. We're going to be talking about patience. Yes, patience. This is the show that we do Monday through Friday. We look at all the indices, all right, or a majority of them. We look at the dollar, we look at bonds and yields, we look at commodities, and we look at stock market indicators to help us get a good idea as to where the market might be headed next. We got a lot to talk about today, but I want to try to move through it fairly quickly. Let's get into today's show. All right, welcome back. We're going to start off with the indices and the S&P 500. Now, when we go through these, we're going to go through the daily time frames and then the 30-minute time frames just to map out some key levels. All right, so we're looking at the daily time frame. I'm going to say this on this chart specifically. When we got to the top of this channel, that is when we started saying, hey, this is the time where we need to make sure we're taking profits. All right, is it going to pull back? Is it going to break out? Or is it going to, consolidate? And as you can see, since we came out and said that on that video, you can go back and check it, it has been just chop, sideways chop. You could say this is potentially flagging out, but it's been putting in higher lows a little bit, except for today from, comparatively to this day, but it's still technically putting in higher lows here. And we haven't really got any action whatsoever. And you've probably noticed that I haven't been putting really out too many stock charts just because of where we stand currently in the market. I like to see pullbacks or consolidations. This chop has just been a gap up and then it rolled over, or a gap down and then it moved up higher like today. Now, when we get through today's charts and everything in the conclusion section, I'll kind of wrap, my thoughts around, why I think that we can potentially get an overthrow here in the very near future, because I do think that the market is trying to reach that $4,000 level, and an overthrow of this channel could be very well possible given the current context and just how the market price action has been moving. So right now, 3,900 pulled down to that area, immediately got purchased up on just spot on. I mean, look at the low, 3,943 cents. Bam, bought right back up and pushed it up higher. 20 period continues to move higher. 50 period moving average continues to move higher, and the 200 period moving average continues to move higher as well. This looks a lot like February of 2020, right? And on the 24th of February, right, there was that, kind of came down to the 20 period moving average. I posted this on Twitter, and then we gapped clear below the 50 period, and then all heck broke loose within the markets where we started to see some pretty dramatic pullbacks. If something like that happens, I'd still be targeting 3,500 in this zone right here for just a quick hit to the downside, maybe even potentially lower. But there's no signs of that currently taking place, but that doesn't mean it can't happen, right? We've seen markets correct, and they correct aggressively. And we got to be patient here because the market is, one, just consolidating. I wouldn't even say this is that good of a consolidation. It's just really choppy. But the market is consolidating here as it's continuing to kind of drift higher and higher at the upper range of this channel. All right, so it's going to take patience. It's going to take a very tactical approach into the markets to be successful here. And you can see that here on the charts, even on the 30-minute, just up and down, up and down, and up and down, just closing, where we closed today, we were there, on February 10th, 8 days ago. So it's just pretty crazy how this price action is acting. I drew out this trend line that I noticed today. You can see it tacked it perfectly here, and here. So that looks like a level of support I'm going to be keeping an eye on. We have resistance up at 394. The moving average, the 50 period is kind of trying to get straightened out here, which means that the momentum is kind of slowing down potentially. But that doesn't mean that we can't just have a gap up and go, and then this thing continues to turn up further. The 200 period is sloping up nicely here too still. Let's look at the Dow Jones. Dow Jones, also, we broke out of here, but we didn't do so with that much power. You can see it back-tested it once, back-tested it twice, back-tested it again. So this area, this 31,250 is holding as support. I had the target of 32,000 from the descending, broadening wedge pattern that we played out in multiple videos ago on a market brief when we started breaking out of the pattern. It looked like it could hit it, and it's still continuing to chug higher, all-time high for the Dow Jones. The 20 period is sloping up, 50 period is sloping up, the 200 down here is sloping up. Still very bullish context. All these gaps, not the most structurally sound market. As you can see, it just presses higher and higher in the overnight sessions. But nonetheless, it's still in bullish context. Very similar here on the 30-minute time frame. You can see the DIA tagging down this trend line right here. So I'm going to keep an eye on these higher lows. If that breaks, then I could see us targeting a little bit lower. You can see a couple reversal type looking candles here, but that doesn't mean that we can't just get a gap and go into tomorrow. I don't know where the futures market is right now, but if we start getting above 317, 317 would then become an area of support. And what we have been seeing are these overthrows, these gap ups, but then they roll over. It's been like a theme here. You can see, gap up and then roll over, gap up and roll over. We had this gap up and then it rolled over. So, and sometimes when it gaps down, then we see it, move up to the upside. So it's just very interesting price action, very choppy, hard to trade. So you got to just be very careful, very patient in this environment. Let's look at the NASDAQ, the Qs. This one pulled almost down into the 20-period moving average today and formed a little bit of a hammer candle right here. So this, to me, looks like it could be set up to move even higher. However, I will, call out the price percent oscillator. It does look like it wants to have a bearish crossover, but it is still above zero and still, sound within this bull channel. And you can see the moving averages all sloping up. So the context is still there. It's going to take one powerful move to, change this type of momentum. 30-minute time frame, interesting here. So one, we gap down, okay, we pulled down into about 330.50. That acted as an area of support right around here, same thing. And then we basically chugged all the way back. Now, there's this gap right here. This gray box is a gap. So what could potentially happen? If we get a gap up and maybe we clear this box, that to me, one, we'd have to look at this channel or this trend line here, so it could act as resistance. But if we do get a gap up, that would leave this little pattern down here floating, so it's an island reversal pattern, meaning to me that if we did get something like that and we get a back test, this thing could potentially head higher. This could just be a an early reversal sign. So we pulled back and then potentially get that overthrow, that overshoot, which can send on the daily time frame even higher past this to make all-time highs on the Qs or the NASDAQ. So we got to watch out for that. And we do have a lot of support below us still to keep in mind as well. Even 329 here at the 200-period moving average. So it's very bullish context so far. I will say that it is putting in lower highs in the very, very short term. But then again, let's just see how the market reacts overnight to see, should these areas turn into support or if they should hold as resistance come tomorrow morning. Russell 2000 daily time frame. Also, look at the price percent oscillator. It does look like it's having a bearish crossover. This, though, is pulling down to the lower range of the channel. A little bit of a hammer candle here. So it came all the way down, one nasty red candle on a gap down, but then all of a sudden got bought right back up right around 220. So this, to me, is like pulling back a little bit, and now it could be setting up if we get above 225, 225 to potentially head even higher to push all-time highs again. Given the context, that to me would be the more ideal thing to take place, but nothing is certain yet. Once again, it is a bull channel. It's in bull context. It is forming a bullish type candle, even though it gapped down, but it did show strength intraday. The only kind of bad thing in our favor here is the price percent oscillator, bearish crossover, but it is above zero. When you look at the 30-minute time frame, you can see a high here, a lower high, and then a lower high as well, but it's also creating this could be potentially an island reversal type pattern as well if we gap and go going into tomorrow. If we get above 230, then I don't see why this thing couldn't continue to scream higher, but this also could be triggered as a double top right here if we don't make it back up to 230. All right, there's all kinds of things going on in the market. So let's look at indicators. I want to first start off on the VIX, and you can see today we came up, we retested this trend line again. So this trend line is holding. Now the confluence of this trend line and this one, we clearly tagged into it and moved lower. So we did finish a little bit positive on the VIX, but still nothing too dramatic. This week is OPEX, and we typically get crushes into OPEX. So we'll see how this progresses throughout the remainder of the week. We don't have too much time left in the week, only a couple of trading days. So we will see. Will this gap ever get filled below us? Maybe, maybe not. Still, we're trending sideways, and this trend line is holding up. All right. Now, keep in mind the correlation. If we get these spikes, that's when you want to make sure that you have stop losses in place on your individual trades, because the market will go down when you see these really aggressive spikes moved up. Now, if we start seeing it drift lower and lower, you're going to want to have individual stocks, kind of ideas of individual trades set up to play into them, because the lower this goes, we can see individual trades break out. Now, the only trade that I posted today was ticker symbol GES, and I said that I entered into that trade a small position, mind you, because it's highly shorted. So that's GES. Okay, GES. highly shorted, 17%, short float, 6 days to cover. It's coming into an area of resistance that if it does get above it, I feel like the shorts are going to feel inclined to cover. And if they do cover, with 6 days to cover, it's just telling me like, hey, the squeeze can get pretty aggressive on something like that. So my hope is that the VIX kind of does get crushed into OPEX week, because if that is the case, then we'll see, like for example, that stock that I called out, GES, could very well rip up higher, make a few points, and then I'll, get rid of the position. So we'll see how that plays out. Here is the BP charts. The BP charts still diverging. The market moves higher. These things continue to lose breath here. You can see it's just heading lower on the RSI, heading lower here. I mean, yeah, we did see a little move up. We called out this oversold reading. Okay, we called that out. And then what did we say? We said, well, it can stay oversold for a while, but we also now have to look out for a move higher. And that's exactly what took place. But still note, divergence. That's not the greatest sign as the market continues to move higher. On the breadth side of things, the NIMO, horrible breath, minus 5.2. And I just can't get over the similarities between 2020 and 2021. Now, even on the similarities with breadth, okay, you can see here, negative divergence, and you can see when it did have that pullback into the 50-period moving average. I know that's not up here on the S&P 500, but that's exactly where it tapped. It went below the 20, tagged the 50, recovered. Okay, I posted this on Twitter today. Not this chart, but I posted the chart of the candlestick chart of the S&P 500. Notice where the breadth came down to and tagged here at minus 60. Look at here, okay? This pullback here went below the 20, tagged the 50, then recovered. Same exact area, minus 60 on the breadth as well. Came back, shot back up. We have a negative divergence here. We have a negative divergence there. It's just like the similarities are mind-boggling. But the reality of the situation is no way in heck that we're going to see the same exact thing play out continually. Like, it just, to me, that sounds unlikely. But just the fact that it's so similar, we actually have to just keep that in mind. Okay, because if we do get a gap down and it goes gaps below the 50-period moving average like we saw here before the March crash, you got to be careful. You got to be ready for something potentially like that to happen. I personally don't think it's going to happen, but I am definitely prepared and definitely ready for if it does. All right, so my opinion, it doesn't mean anything. How you respond to the market matters the most. Okay, so a lot of people ask me like, well, what do you think about the fundamentals or this or that? It's like I listen to what the market says. What the market tells me, they take all that data in. Because you got to understand. Okay, let me backtrack here. I'm gonna go to my next chart. Did you see all this data? All these candles? Okay, well, guess what? News articles came out this day, that day. Earnings this day and that day. You got to understand. My personal one person's opinion does not mean anything to the market. It does not. Okay, the market is made up of all kinds of opinions. All right, whether that news is good or bad, and it takes those and it combines them into all this price action. So don't ever get hung up on a narrative by one single individual, because that individual, like, you might be like, well, no, they were right once. Yeah, okay, cool. They were right. But understand that the market is always right. The market does what the market will do. And you got to be prepared for when the market moves in a way that you might not agree with. Okay, when this thing crashed down, if like you didn't get out here, right, you would have just held all the way down, and then you, when it recovered, then you'd be like, yeah, see, I told you, like, I knew that it would recover. Yeah, but guess what? If you got out here and you started buying in here throughout all of this phase, you would have a lot more money. All right, so you got to pay attention to what the market is doing. Look at the price action. All right, I'm looking at the NIM right now. Asset managers, right, back up, max, not max, but they're back up here to the top. Full bullish, using leverage above 100, insane, which tells me, and the same thing with the Ridex here, extremely bullish, which tells me that they're very exposed to downside. Now this can change on a dime. Like it can move down quick, just like we saw here. But keep in mind, like there's a lot of risk involved. They're exposed to downside moves. So if we do see something play out here, you're going to see this drop very quickly. Very, very quickly, to make sure that they reduce the exposure to the downside. So you got to just be prepared. You got to be patient. I still think that there's possibility of an overthrow, but we'll get into that here in the conclusion. Gold continues to get hammered down. Okay, we're now back testing This area, you can see that it pulled down here. It looks like it wants to start breaking down from this area. The last time we reached this level, we did see a pretty nice solid move to the upside. Lower highs have been building up. Maybe this is going to create another lower low. We'll see. It is running into, this is support and it was resistance. So this area could very well hold. We will see. I'm still, like I said, on the weekly recap on Friday or Saturday. Whenever I post the video, I'll bring in a yearly chart just to show you like the big context of things. Why, one, I'm still bullish gold. I prefer this to keep continuing to move down because to me, that would present a better buying opportunity. I've already bought down in this level. I bought down at the March low, 2020 March low too as well. I bought gold and silver down there. So I have a pretty decent sized position, but it's nothing like, you know, if it goes down 50%, I'm not going to be. So you got to understand positioning sizing with all of this. Even if silver dropped down to $12, I would still have, you know, my initial position size. my initial position still there. So even if it does get cut, and you got to think of this, it's not going to like my portfolio is going to get wiped out by 50%, even if, you know, a commodity goes down by 50%. So you got to really focus on position sizing when you're getting into the gold, when you're getting into silver or any individual stock. You know, you don't want a stock to go down 20% and then you lose 80% of your portfolio because of it. That would be absolutely bonkers. So you got to be careful with that. You got to be careful with leverage. Let's get back to silver. Silver continues to move sideways. Not much to report on silver. Bitcoin did see some strong strength. This little thing, this little rising wedge pattern, I'd consider that either one, an overthrow, or just a breakout and continues to move up higher. We had a high just past 52,000. It was 52,150 is where we are trading. That was the last trading period where we capped. Where when I pulled this chart, but the high was 52,550. So we'll see here how this plays out if we see continued momentum. This did look like it was crossing over, but after this strong green day, it just went straight back up. So, you know, we'll see here what takes place with Bitcoin. WTIC, I've been thinking that this is going to take a moment to breathe. So I'm going to show you the weekly time frame and the daily time frame. The weekly still suggests it can get up to 62, 65, and maybe then we see consolidation. It is oversold on the RSI, showing a lot of strength in the MACD. But geez, holy moly, this thing is just powerhousing through the last 3 weeks. So, you know, what's going on? But it is coming up into a big area of resistance here. So we will see if it doesn't want to take a little bit of a breather as the energy sector continues to be the top performer, you know, moving forward. And here's it is on the daily time frame. You know, this candle didn't look too good. All right. And then this one showed a lot more strength. Very frothy on the RSI. This, to me, looks like, you know, I wouldn't go long at this particular point now. I now want it to pull back. I now want it to consolidate and show signs of, you know, taking a breath. I would like to see something like this happen again, because that would give me the confidence that we can see another move higher. This doesn't mean that this can't continue to grind higher and move higher and keep the RSI overbought. That's not what this means. We have a lot of technical distortions been playing out in the market, so there's no reason I'd be shocked to see this thing continue to move higher. Just know that you need to pump the brakes a little bit when you do see these extensions, because of the fact you don't want to get caught or trapped up in a trade. And then we got the CRB index coming into this area of resistance just those last 3 weeks. Look how strong this is, from 175 getting up to about 190 in 3 weeks, in a month's time. That's a very, very strong move in the commodity. And, you know, this is a widely tracked index, the CRB. The Fed looks at this. Everyone looks at this. Hedge funds look at this. Price percent oscillators trending up. This thing's getting overbought. You know, we're now getting above the 2020 high, or, you know, right before the March crash here. We're getting above that. So, you know, what happens if we start breaking above these levels? Well, this resistance then becomes support. And you just got to ask yourself, okay, so what is going to take place if we started to see commodities continue to just rise and rise and rise? So oil continues to move higher and higher and higher. You know, not gold or silver, they're not performing nearly like some of these other commodities, but you start seeing like lumber continue to rise and rise and rise. You start seeing soy, wheat, corn. You see all of these commodities just getting more and more price higher and higher. You know, at eventually some point, somebody's gonna have to take notice. I mean, the consumers are taking notice, because everything's getting more expensive, you know, as the days progress. Let's look at the dollar. Now, this is interesting. Look at the dollar. That was a strong move for the dollar. Okay, we gapped and we went. Okay, that was breaking out of 1, 2, 3, 4 bar breakout there. And it was breaking above this resistance too. So that is showing us some strength. What's interesting here is that the S&P 500, we've been running up at the top end of this channel. This to me tells me that if we start continuing seeing this strength in the dollar and this mirror action, right? The S&P 500, the dollar is up here. Why wouldn't we see the dollar or the S&P 500 start to head down if we start seeing this continue to press higher? That makes a lot of sense to me. The market didn't really respond too much to this. That could be because we're still well below 92 in a bearish trend, but we are now back above the 50. We're now back above the 20 period moving average. So the short-term trend is bullish. Why? Because we have a higher low. So low, higher low, and now we're back above the 20 period moving average, and the 50 is starting to flatten out here a little bit. The 20 is sloping up here. So if we can hold that, that is showing me the trade is bullish, but the trend still remains bearish. Okay, the trend is bearish, the trade is bullish. All right, and if the trend wants to become bullish, well, it's going to have to require a lot of bullish type trade setup. So right now, it's looking pretty strong. It's looking pretty healthy. What would be nice to see is to get above this 91.50 and above 92, because that means that the dollar would be putting in a higher high and a higher low in the short term. And that to me would indicate that the dollar could see some strength and we could see continued strength moving up. But that's not there yet. We still have time. We got to see how this plays out. If this continues to move higher, I would imagine that the correlation between the S&P 500 and the dollar will hold tack, which would tell me that if the dollar continues to break through, we're going to see the S&P 500 start to see some weakness. But who knows? Let's look at bonds and yields. Yields, nothing to report on today, down just slightly. And in the TLH, we marked out areas of support down here. A little bit of strength today. We'll see if this can hold as an area of support. But once again, nothing to report here other than, the RSI upticked a little bit. This is pretty, oversold. So it wouldn't be shocking to see some sort of a bounce, maybe a retest and then head lower. Not too sure. We will see. We will see what takes place. All right. So just to wrap up everything in the conclusion section. All right. I've been very picky with individual stocks as of lately. I've been talking about patience, right? The thumbnail said patience. Well, the reason why is just simply because of this chop. If you feel the need to find individual stocks and constantly be in the market and go, 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 even in times like these, you're going to get trapped up eventually. There's always going to be good setups, but you want the odds in your favor, okay? And the odds in your favor are going to require you to be very tactical in your approach. So yeah, you can find good setups even in times of chop like this. I personally, when I get into individual names, I do like to see some sort of signs that the S&P 500 can move higher or various other indices can move higher. This little bull flag tells me that, yeah, we still can potentially see an overthrow past this channel. The dollar is a little bit concerning to me, and some of the other indicators that we went over, but everything as of right now seems to be risk on still in this current time. That does not mean that it can't change very quickly. So you just, like I said, you got to be very patient in these times. You got to monitor your risk, okay? Look at your position sizing and play this for the long term. Because if the market turns around very quickly and then all of a sudden, like it drops below the 50 period, starts heading lower, and all of a sudden you're like, well, it'll probably come back. I'm just not going to get out of my position. That means you're failing to comply with your stop losses or your strategy, unless if your strategy is to just hold on while it falls down because you think it's going to get back up to the top anyway. I will say, yeah, maybe that might happen in the S&P 500, but various stocks, like if you said that about GameStop or AMC and you bought it at the top and you're like, oh no, it'll be back. It's at 400 right now. It'll probably go to 800, in a couple of years. That's just stupid talk. All right, you get wiped. And just looking at the options data right now, like the put to call ratios and the amount of just I guess what's the word here? What is the word here? Just not euphoric, but the amount of people entering into the options market, especially on like single option calls, is like beyond bonkers. It's super speculative right now with very unadvanced trading taking place. So when you compare what we look like right now in the options market to where we were in 2000, it's like vastly different. So it's just way more leverage in the markets, which tells me that if something were to turn, it's going to be a lot more aggressive than what we've previously seen in other market crashes. So like always, maybe we don't get the crash. Maybe we do. Who knows? But just look for good setups. Play the market how you see it. Play the trade setup. Have a strategy. Have a plan. Get in and then get out. Make sure you take profits when they're available. And that's how you do it. Simple as that. All right. That's all I got. See you later.